Hello, this is Cary with Wicked Signal. Today's video analysis on Dynavax Technologies Corporation, symbol DVAX, was recorded on Monday, February 1st, 2021. I'm covering this stock today largely because it rallied almost 50% on Monday, February 1st from the preceding day's close. There was a few things going on. I'm going to jump into that in a moment. I'm also going to talk this chart and give you the extremes, so forth and so on, as per usual. But before I do so, I just have to remind you to please tell your investor or trader friends to go to wickedsignal.com, click on the free subscription link at the top of the page, provide their first name, last name, email address, and you or they will receive a new email every single time a new video analysis is released. I won't fill your email inbox with all kinds of marketing offers, and I will not share your personal contact information with anyone outside of the organization. So yes, Dynavax did rally almost 50% on Monday, February 1st. It was, sort of headlined a bit on Motley Fool. There's a bit of a buzz going on the internet, so I thought I would jump in and take a look-see and give you my 2 cents on this stock. Let's take a look, first of all, and go back to some of the extremes. And you can see in the far left of this chart, 2006, it had a 106.60 high, fell dramatically over the following 2 years to $1.50, rallied over the following 4 years to 53.40, then down to 9.80, up to 32.49, back to 3.20, up to 24.45, down to $1.80, the COVID low of April this year, and the high so far in July was 12.44. We have a 10.27 last. The high was 11.69 on Monday, February 1st, and that was over a thing actually from the preceding Friday's close. So let's talk a little bit on the fundamentals in this chart. I'm not much of a fundamentalist. I don't read too much on the fundamentals. I do obviously, take a look to see what's going on. Just a little bit about Dynavax Technologies itself. I'm just reading this plain and simple from the About page. Dynavax Technologies Corporation is a fully integrated biopharmaceutical company focused on leveraging the power of the body's innate and adaptive immune responses through toll-like receptor, a symbol TLR, or abbreviation TLR rather, stimulation. Dynavax develops and commercializes novel vaccines. I could go on and on. There's more and more to that About page. But really, we need to talk about why did this rally 50%. The bottom line, Dynavax is heavily involved in the COVID research, vaccine research, and 3 things occurred over the weekend or on Monday that launched this near 50% rally. First is Dynavax and Clover Biopharmaceuticals. They announced a plan to kick off a phase clinical study in the first half of this year evaluating Clover's trimer COVID-19 vaccine candidate with Dynavax's CpG 1018 adjuvant. My goodness, there's a lot there. There's 3 more sentences just like that. I'm going to read them off to you, and I'll let you dissect them and interpret what they actually mean. Second, Dynavax and the Coalition for Epidemic Preparedness Innovations announced a $99 million deal for Dynavax to supply CpG 1018 manufacturing for the global COVID-19 response. And third, the company announced that the UK government is ordering an additional 40 million doses of Valvina's COVID-19 vaccine VLA 2001, which uses Dynavax's CpG 1018 adjuvant. So the common thread there seems to be Dynavax CpG 1018 adjuvant. I suspect that is their core product, and it is heavily involved, obviously, in the COVID-19 preparedness. And that's about as deep as I'm going to get on the fundamentals. Bottom line, there's a lot of COVID stuff going on with regard to this stock, and because of its position in the market, it did, in recent positioning, I should say, it has rallied 50%. The big question, obviously, and I know I could have begun with this, is does this rally have legs? Is this going to continue on and upward? You've got some precedent here for some very high numbers. Forget the 106.60 in 2006. How about the 53.40 in 2012? That would be a 500% return, roughly from where we are now. So forth and so on. So let's jump into the charts, have a look at what we've got going here. I'm going to convert this monthly chart into a weekly bar chart. Looks much more dense, of course. And I'm going to zoom in primarily. I'm not going to say zoom in. I'm going to focus primarily on the area that you see in the red square. And we'll take a look at some things that are going on with the weekly chart here. First off, you have a rising, ascending channel top that is based off of recent lows. When I say recent, I'm talking the low from about almost a year ago in March of 2020 against that July high. I'm not going to give you those numbers exactly. I'm just charting the formations right now. I'll give you those numbers in a moment. And then kind of coming in on the same vicinity is a significant trend-defining instrument I've been using in the commodity markets for years. I also like to use them in the stock market for longer-term identifiers in terms of trend, support, and resistance. And right now, these areas, these two line studies are merging. They're closing in on each other, and they come in this week, the week of Monday, February 1st, between $14 even, which is the channel top, and $15.13 even, which is the descending 1/3 speed line. I'm not going to get into the details on how to construct a speed line. I don't have a problem showing that. It's just that were I to do a proper video showing proper speed line construction, it itself would take probably 10 or 15 minutes. And just trust me, you can look that up if you like. You can Google. Maybe you're already aware, speed resistance lines, speed lines, different terminologies. But let's continue on with the video, shall we? And then as we continue 8 full weeks later to the week of Monday, March 29th, they merge together perfectly at 1445. So you could do simple math here. That speed line, 1513 minus 1445 divided by 8, and you'll know where it is each and every week, all the way to the last week of March. And the same is true, of course, with the ascending channel top, $14. So 1445 minus 14, divide by 8, and you'll know where that channel top is each and every week. They're obviously getting closer and closer and closer together as we get into later March. We can just say the $14 to $15 area is our primary resistance. And despite this 50% rally that we saw on Monday, I do believe that this stock can quite easily have trouble here. Will it have trouble here? I don't know. But if I were to pick one spot on the chart where this stock is going to have trouble to the upside, sustaining a protracted bull move, it would be here. This is also breakout resistance as we continue into the second quarter, or depending on timing, it could be sooner than that. I'll show you that in a moment. But right now, let me just finish the concept here with the $14 to $15 resistance as one able to contain buying on a quarterly basis. From here, we could top out, through the second quarter perhaps, and fall all the way back to that old congestive area that I'm circling here in red, between $3.50 and $5.50. And so we could fall all the way back into that zone within several months of testing the $14 to $15 resistance area. But let's talk about the possibility of closing above this $14 to $15.13 area. Now, I'm just giving you the data for the first week of February. I just gave you in the preceding slide everything all the way into later March on this resistance area in the $14, $15 area. If we happen to push through and close above $15.13, for instance, the end of this week that I'm speaking of, Monday, February 1st, or wherever these formations may be between now and the end of March, if we settle above them clearly, and I like the 1%, by the way, so 1% of 15.13 is going to be about 15 cents. It'll be about 15.28 or so. So if we close 15.28 or higher on the week of Monday, February 1st, and you can do the same sort of 1% violation threshold all the way into later March on this area, then we do have a sustained rally. And the question is, how long will it take to get into the $22 to $23 area? That would be indicated, though, and that's really the point I'm making here, that yes, we can fall back from $14.15 into the second quarter, back to $3.50, $5.50 a share over the following several months. But inversely, if we close above $15.13, we have a 2 to 3 month rally. And it could be 2 to 3 weeks if more favorable news comes out on this stock. But I'm just going to say, out of just guessing visually, 2 to 3 months, closing above 15.13. Expect the $21 to $22 area resistance where we could actually top out into late. That is a significant convergence of two meaningful channel structures that is longer term in scope. In other words, it could contain annual buying pressures if we test it, and I do believe we would test it. We will test it if we close this week once again above 15.13. That 22 to 20, the $23 an area resistance, once again a 2 to 3 month target, able to contain buying through 2021. Now, let's take a look at this $22 to $23 an area. We do need to sort of back up to a monthly bar chart once again and reconstruct it there so you can get some proper context as to what the target would be if we take those out. And so you can see here those formations at $22 to $23. If we take them out, now we're talking mid-50s. So I'm not about to say that at all that we're destined for 53.60. There's just no way that you can extrapolate that from what I'm seeing here. But I will leave you with this. Party begins with a settlement above 15.13 the week of Monday, February 1st. That all comes together as a 14.45 that last week of March. If we get up and over that, then yes, $22 to $23 within a few months. 22, 23 can contain annual buying pressures, but if we take that out, this move becomes increasingly accelerated and vertical. And 53.60, my goodness, I don't know. If we take out $22 to $23 a share on this between now and say the end of the second quarter, we could, by the end of the year, with that kind of volatility and that kind of market breadth, that kind of movement, reach that 53.60 within the scope of 2021. But, I don't want to get way ahead of myself here. I'm going to leave you with this chart that none of this is possible until we close above this $14, $15 area. And this area is one that can absorb buying through the second quarter. So for those of you who like to sell calls, but when we reach into that 14, 15 area, you could have at it. Inversely, if we close above it, cover those short calls, cover those long puts and reverse. Because this market is going to push, in my opinion, into the $22, $23 area within just a few months. And that is really all that needs to be said for this particular video analysis on Dynavax Technologies.